starting the corporate tax section. We are very happy that we open our office in Calicut. We have lots of vision about our new venture. We want to have a complete back office in Kerala to support all our UAE operations. Especially we are mainly focusing on Dubai market. Along with that, Abu Dhabi, then we are moving maybe on the 6 months down the line. We need to move our office to other GCC nations. That is our vision. So maybe they point out we have to go to the rest of the world. That's correct. That maybe we are going to maybe another 2 years down the line. We need to have multiple operations across the globe. So this is our mission. For that, I think this will be the first step that we open our back office in Kerala. So I am really thankful to all my team members who are behind this journey, and your support is always helpful for us to bring this back office. Along with that, our mission is to be completed within another 1 year time. And once again, thank you so much, and let's continue with our corporate tax. So in order to help me out with me, Jijo and Fayaz, they are the one going to be maybe some of you answer for some of the questions. And I'm very glad to share my experience with the corporate tax also. You guys are free to ask for any questions, anything related to that. If I'm not aware about that, definitely I will check and let you know about that. Definitely, I'm not an encyclopedia to answer to all of your queries, but definitely yes, I will try to do my level best to answer or share my thoughts with regards to the corporate tax. So let's continue. I know we are a little late. We are supposed to be started at 2 o'clock. So initially, maybe this is something like we are planning to the next level. That's why there will be small bugs will come, but at the same time, I'm really happy to a certain extent we reached our goal. So there are little delays, 10-15 minutes. I'm really apologize for that, but again, let's continue with the rest of the sections. Okay. So anybody has the questions? So let's continue with the live section questions first. There were some questions pending from the live section that I am ready to answer. Along with that, if anybody has the audience, they can, and even obvious, my close friend, Mr. Oliver is here. He was asking me a couple of questions. Maybe when he's sure, he is a much experienced person. Maybe some of you guys are known. He's one of my best friends. I really blessed his presence over here. Then Mr. Raj and Ali, they were since beginning they were with me, so I don't want to thank them. They belongs to my family always, and Anil and always. And maybe some of you know about Jishnu. He is actually taking care of my marketing, and he is the owner of Spider-War. So basically, I'm very blessed you guys are over here. So let's continue this. Nobody has the question. Then I'm happy. I can give it. Take this as a challenge, even if you are my part of team, you have maybe lots of doubts. Let's clear that. That will be helpful for all the other team members also. Maybe I can improve my knowledge in the corporate tax. You guys can share your experience, and even these guys can explain their doubts.
Yeah. So from the live section, Sona is having one more question. I would like to ask one more question regarding the percent of withholding tax in UAE.
The percentage?
Yeah.
Okay. Withholding tax, I have just pointed out in the corporate tax section what is withholding tax. Basically, this is withholding. The term itself is mentioned over there. The supplier has to be hold some tax on behalf of the customer for the purpose of paying to the permanent residence country. So in here in the case, UAE has to withhold it from their customer if the customers are outside the UAE. When it comes to the corporate tax, withholding tax percentage, in UAE it will be 0. There will be no withholding tax in UAE. That means ideally there is no effect on the withholding tax. It will be 0%.
That's another question. This is from Tom Babu. Will there be a requirement to pay UACT in advance?
If you have money, yes. But there is no possibility, there is no requirement from the FTA that you don't want to pay any single fees to the FTA other than advance. There is no requirement. Let's have some questions from
Is there anyone who wants to? Okay, hang on, everyone. Just give one by one and you. You want to go first? So, good afternoon, sir. I wanted to know, will there be any consequences or changes because of the implementation of corporate tax? Like in the companies?
See, the consequence or the implications. It's all about it is going to be effect on your cash flow. So we cannot be say this is a consequences. In all over the world, each and every country, there will be a corporate tax. So it's definitely going to be effect on your cash flow. Out of your taxable profit, there is some portion which is going to be paid for the government. So what was the scenarios in the previous years over here in UAE? There is no corporate tax concept. That is why if you get 100,000 taxable profit, that is belongs to the board of directors or owners of the company. Now out of that, 9% you need to pay as a tax to the government. So that is the implication, not a consequence. It's not a consequence. Basically, as I mentioned in the previous note, 9% is the lowest among the world, among the regions. So in that point of view, UAE never had any such financial consequences or anything relating to by implementation of this 9% corporate tax. Definitely yes, from the company's point of view, there will be some cash flow issues. Along with that, there will be some cash outflow into there. So that as an implication. But I may not be want to use the term consequences. This is an underrated. There is no such thing. But you can make sure one thing. UAE always will be the investor friendly country around the world. That one thing is very sure of that.
Good afternoon, sir. Is there any way where companies can reduce the tax they have to pay legally?
Let's take it in a different way. Reduction, yes, definitely there are ways that we can able to reduce the tax payment in a legal way. It's all about, that is why the importance of finance professionals or the accountants comes over there. As I mentioned in the previous classes, the entertainment expenses, the same questions I have received from Oliver after Nabi, how I will come to know what is my business expenditure for the company. It's all about company to company, it may be going to be different. And case to case, it is going to be different. Okay, let's say the owner has gone for some family trips in somewhere in Europe, and they had a business meeting over there. So those business meeting is considered to be a business expenses, even if it's a family trip. He had gone for this purpose, only for the business purpose also he used. So supposed to be that expenses can be deducted from my business expenses. So this is one way. So basically, the accountant or the consultant need to be identified what can be deducted, what cannot be deducted. In that way, legally I can. Then other one about the arm's length transaction or transfer pricing. So in each and every company there will be key management persons. So if a company is a 100% shareholding company, there will be only one single shareholder. The manager or the owner decide what is his salary. But what the FTA says, there will be an industry practice, there will be a benchmark in the market that a company manager can withdraw this much of the amount from the company as a management remuneration. So if the industry benchmark is 100,000, you cannot able to withdraw 200,000 as a salary over there because that is against the benchmark and against the FTA guidelines. So basically, it's all about identifying the right expenses and how it is going to be affect on your taxable calculation. That is why legally we can reduce our taxable profits.
Thank you so much, sir. So one more question.
For me or for them?
Related to corporate business. So what about companies that are facing liquidation bankruptcy? Do they have to pay the corporate tax or is there any exemptions for them?
It's clear, right? They are going to be liquidated or bankrupt.
But then it's tax, right? So something
If
like that.
they are going to be bankrupt, obviously there will be no taxable profit. Why I need to shut down my company if I have a profit in the company, right? So definitely the company does not make any profit, so that is why I got bankrupted, or that is why I got liquidated. In that point of view, there will be no tax. But on the other side, I have enough profit in my company due to some other economic conditions or due to some other reasons, I liquidate my company. In that case, in order to liquidate, there are certain procedures are in the market. Like you need an audit report, you need a liquidation report, The auditor need to be certified you don't have enough profits in your company and you don't have any tax payment liability to the government. So in that point of view, yes, there will be some certain requirements are there. On the other side, there is no tax liability. If they have profit,
Anyone else would like to ask? Oliver, Mr. Oliver, you have?
Thank you, Charles, for all your information so far. One question regarding what you expect as formal requirements for those business-related expenses. What should we have? Contracts, proof of delivery, proof of services, invoice with all the details. How picky do you think the government will be?
yeah. I need to be answered this in a two different ways. See, this is the question that I am expecting from you guys. I want something that makes me more challenging. Then only I can be more into the corporate taxation. How, as a finance professional, how do we protect our company in terms of corporate tax? As I mentioned, we need to keep our books of account for the next 7 year time. That means the company or the finance manager is liable to keep all the records which is related to the corporate tax. So if I have some business related expenses, I'll come back to your question. So if I have a business related expenses, what are the documents? So what FT is doing, all the legitimate business expenses, which is only for the purpose of taxable income, which can be deducted from my taxable income calculation. So if some business related expenses, especially the entertainment expenses, if I go for some party outside, if I can able to prove that, okay, this hotel bill is for my business trip, obviously that hotel bill is there will be some notification comes from your HR team or wherever it is that it is going for the business purpose. If that's the case, I believe the hotel bill plus the email notification will be a supporting documents to justify your business trip. In that case, those business trip expenses can be claimed back as part of my taxable profit calculations. Then, any contract or any other thing. So, here we have to be read this in both the VAT and corporate tax. So, in the VAT, we can come to know if an expenses, owner has spent some petrol for this personal purpose. How the company can prove that owner is using this car for the purpose of my company? Definitely, there will be a contract, HR contract between the company and the owner. The company is saying that, okay, I will be able to give the traveling allowances and petrol allowances for my owner. So there will be an implied contract between the owner and the company. So that will be able to support your future business expenditure. So I think that is this moreover, since you guys are not in the business ownership over here, the guys who are sitting on the front, when it comes to the business owner or entrepreneurship, we always want to keep business and owner separately. If you are the owner of the company, definitely if you spend one fees for the company, that company has to be paid back. So that is why, for the corporate tax purpose also, if owner is spending some money for the company, then the company, at least in the paper, the company needs to be paid them back. Then I can keep personal expenses separately, business expenses separately. Okay. I can have some questions to Fayaz and they are also ready to answer some of your questions. Or else, you may thought that, okay, I'm the only one doing all this. Let them also give them some chances. Let them decide that.
Anyone have any questions? One.
So corporate tax is like recently implemented in UAE. What are the job prospects that we can expect in the future because of this recent implementation?
As already know, we had a great discussion about corporate tax from the morning itself. It's a great opportunity to, as an accountant, and an auditor, we have a lot of opportunities coming back to the, and the job is also challenging as well. It's not simple as it is. Or stating, okay, this expense is for water, and this is expense is for car, and we can't accept these kind of things routing into the P&L and showing us that my books are set of those from once they implemented. Already the law is already implemented, and the government is also stating one more thing for the purpose of doing. Suppose now we have some expenses for the businesses. Now we are going to for just showing my profit in the next year. Next year we need to show my profit less. So just increase my director's salary to 50,000 to 100,000. So my basic the salary for the company will increase and the profit will go down. So these kind of things the people will start doing from the corporate taxes implementing. These kind of things now itself, the government is knowing this thing. We need to be penalized on that. Okay, so why this? You see that they are asking for 7 years reports. The corporate tax is not just not asking simply. If you're starting from today, the next year onwards, if the director's salary is increasing to 100,000, you can't show an effect in the previous 6 years. It will be showing from the next year onwards. So obviously the government can see the differences. If suppose some tax or anything is coming. So those kind of things maybe from our management side they are asking you to do this one, do this one. So we can't do as an accountant from today or next month onwards, we can't do that. We need to have the proper records, proper things, everything, then only we can do those kind of things. And back to his question, what are the opportunities? So I told it's more challenging. Now before itself we have only one P&L. From next month onwards we should have 2 P&Ls. One is for government, one is for management. Management will show the actual expenses. For the government, we need to show what are the expenses we need to add back. We need to do some from some adjustment we need to do. Then only we will be having what is need to be payable to the government. Okay, so our tax analyst will be there, tax auditor will be there, some senior person business analyst or tax business analyst. So those kind of opportunities will come. But I told it should be more complex or more opportunities coming, same as it is. And you know that one, if something go wrong, you will be liable for that one. If something is happened, a tax audit is coming from the government, you also will be liable. Because who done the work, you done the work. If something done wrong. So you will be also penalized for that, or you need to be liable for what the liability is going to be paid.
And you will be there will be job opportunities.
Great job opportunities for next month.
I will share with you my experience. Since you asked me for the job offer, maybe my HR team comes to know that I was searching for a right tax manager for the last 1.5 months. I could not able to find the right person for the manager. Maybe I don't know it's a problem with my HR team. I don't believe it's a case, but you know that's the fact here. If anybody wants to get the job, yes, the job opportunities have increased in the market, and there are lots of vacancies are there in the market. The only thing you need to find the right person. So in our case, we could not able to find the right person for the tax manager. We were able to hire for the accounts position, junior accounts manager, all these kind of things. But as a tax manager, still we are facing some difficulties with those kind of people. Since there are people in the market, they are maybe they are aware about UAE corporate tax, not about the international tax. So, when it comes to the opportunities, yes, obviously, I can say maybe 2 or 3 times the vacancies have been increased due to this corporate tax new implementation. It's definitely yes, it's increased. Yeah, please. Go ahead.
Hi, I just have a question. As AI is increasing nowadays, can AI affect the finance sector in the future? Like AI, artificial is increasing
artificial.
nowadays, yeah?
Okay.
So can it affect the finance job in the future?
I have a right person to answer you for the AI. Oliver is from an exclusive risk company. He is actually doing the multi-bit. So I will answer to that. I just introduce that answer. So since you mentioned about AI, these guys were doing the artificial intelligence on the right track. They were doing these kind of workshop. From the ROM itself, you can see what is happening behind your screen. That is what the AI is happening. So to come back to your question, sir, you want to answer anything with that? Yeah, it's me, sir. Okay. So when it comes to the finance, I don't think the AI has much significance there in the finance sector. Let's say, what is artificial intelligence? So, what is artificial intelligence? Do you think that the finance is going to be effect out of the AI?
Not really, but I have seen like even AI can make the cash flows, everything we can use it.
In accounting, if you ask me about the cash flow or particularly relating the MIS report, even 10 years before, we were automating all these kind of reports in the ERP. So in that case, we are much friend than the AI over here. Right now, maybe in the last 2 years or 3 years back, the AI is much popularized in Dubai or in all over the world. So even before that, the accounting professions were using the ERP solutions. So in that case, yes, if that's the case, you mean to say about the cash flow or balance sheet or profit and loss account, if that's the case, it's automated maybe 5 years or 6 years back. I believe SAP has came into existence somewhere in 2010 or 2008, somewhere around that. So almost 12 years back, the ERP has implemented.
Sir, I would like to add to a point. These days, like even I have heard about auditing also. Like a lot of auditing is done through AI because they are more efficient in finding the differences than us. If we put the sale invoices.
In the term AI is different. It's not about AI. It's about ERP solutions are there. But there are some, in all the big 4 companies, even some of the top auditing firms, they are using some softwares like Canvas or some such kind of auditing software. So maybe some sort of modules has been added over this. Since I don't have much experience in the auditing. Maybe 6 years back or 7 years back, that's the last time I did the auditing. So maybe during that time, this was the modules over there. But maybe at the time when it comes to the last 6-7 years, chances are there new modules were added to the software, and maybe we're going to be detect the errors in each one. Maybe the cross-checking or some sort of things, maybe they have added. But in that point of view, yes. But I maybe say this is an ERP. I will never say this is an AI module has added to any of the software.
So do you think our jobs are at risk if I'm planning to be an auditor? So
Definitely yes.
So it is at risk, right?
Yeah.
Would you prefer an AI doing auditing for you or a human?
But I'm not the one going to be answering to that. That you need to be asked with some of the other professionals who are in the AI. So if you ask me about the auditing, yes, I would say yes. We have a clear future. We have you can say a stable future there for the auditing professions. Definitely yes. But from my personal experience, auditing is not. Apart from that, there will be lots of other positions are there. CFO, CEO, there are lots of other positions are in the market. Auditing is limiting your career. Ask me personally. I'm not against auditing, but auditing is limiting your career to an auditing firm. If you're not able to reach your partner, or if you're not able to reach a director of an auditing firm, you cannot be able to 100%. You cannot be able to say that you are a successful auditor.
Yes. I
The questions are coming from that side. Nobody is answering from there.
So you said you're looking for a tax manager, right?
Hmm.
And you said till this day you didn't find the right person. What are the qualities or the side, candidates are looking for? Right? What do you mean?
For me, it's very simple. If somebody asks you about the tax, they have an answer. But from the HR point of view, they have certain qualification, they have certain experience, those kind of things. For me, it's very simple. If I ask you something related to the tax, you need to be answered. That's so simple. There is no other qualities from my personal point of view required for a tax manager. Or do you have any question? I think you have. I wanted to especially point out Sagar over here. He actually, maybe 3 or 4 months back, he got recruited in my back office in Kerala. So when I talked to him about the harvest felicitation ceremony, he was very happy to join with our meeting and he was ready to come over here. I'm very glad that you are over here. And maybe 3 days or 4 days back, you met an accident, right? So, but at the same time, he come over here, he joined with us, and we are very happy that from our Dubai office, we are very happy that he joined over here. So let's come back to the subject. If you have any questions related to the corporate tax, sorry.
I was actually thinking, since you said the fiscal year varies for the different organizations, right? So does that have any implication like how it gets regulated, the payments and the tax?
Sorry, the payments?
The payment of the tax, right? See, for each company, if the fiscal year is different, it would be harder to regulate, right?
No. See, the fiscal year is actually clearly mentioned in your MOA. If you are a DD company, I'm talking in the lights of UAE market. When it comes to UAE, it's clearly mentioned on your MOA what is your fiscal year. Sometimes, if your parent company has another different year, like maybe April to March, apart from maybe sometimes it will be June to May. So, depends upon the fiscal year. That will be clearly mentioned on your share certificate agreement or with your MOA. So, if your fiscal year is mentioning on the MOA, from there, before 9 months, you need to make your tax submission. So that rule is clear there. The only thing the company needs to be desired or to determine what is their fiscal year. So that is clearly mentioned there in the MOA.
Also, I want to add on making the filing and the payment the same way, isn't it?
Yes.
Isn't it a little more tedious and harder for the companies?
No, you have 9 months time, man. What's the law?
I mean, filing and submitting the filing and then the payment is on the same day.
Do the submission maybe on your 6th month. Then make the payment on 9th month. It's the same case VAT, what we are doing. Maybe sometimes we are making the VAT submission on 20th of every month. 28th only the deadline for the tax submission. The same case applicable for the corporate tax also. It's all subjective, what I said. So I can explain my experience. Some of my clients, they are submitting their tax return maybe 8 or 10, but they have given me the deadline of every 15th before 15th of every month, we have to submit their VAT file. But they may make the payment maybe 25th or 26th. It's purely company's decision. So it's all about, some clients are there, they will be make the payment maybe 25 or 28. Depends upon the company. It's our call, how do you want to do that. In case of corporate tax, it's obviously clear. You have 9 months time to prepare all your records for the prior year and you need to make the payment on or before 9 months. Before 9 months completed, you must be get paid for that. That's right.
Anybody else?
In the case we have an audit adjustment on the financial statements, what's the procedure? If we have to submit a new tax return, if we need to change the corporate tax submitted initially.
Audit adjustments, you mean the external audit adjustment?
Yeah, the financial auditor found an error that has to be corrected and there's an impact on the corporate tax. How do we proceed?
let's calculate it in a different. Usually, as per the rule, after the fiscal year ends, within 3 months' time or 4 months' time, you need to submit for the external audit. So that will be the rules say. In that point of view, if I have some rectification entries, if I have some reclassification entries, it's already been passed in my books of accounts. So then after I have 4 months time to submit my corporate tax return. So before submitting or finalizing the records for the corporate tax purpose, all the adjustment, reclassification entries, all the things has been adjusted during my external auditing itself. So before moving to the external auditing, it's already been clarified and rectified in my books of account. Based on that, the company usually have the calculation. So external auditing is one part, but naturally apart from the reclassification entries, is that is something related to business related, interest expenses, those kinds of things nobody is noticing in external audit.
The external auditors now they will have to check also preliminary calculation.
That's the point of it. Until now, nobody was taking care of that. But moving forward, the external auditor has to be verified all the corporate tax rules and regulations, and they have to prepare the audit report. As you know that since they asked me about the liquidation report has to be come from the auditor, external auditor. Without that, you cannot be liquidated a company. The same case applicable for the corporate tax. How your reports not to be monitored by the FT with the help of an external audit report. So obviously, yes, it's the liability or the responsibility of the external auditor to make sure all the records of the companies are up to the corporate rules and regulations. Yeah.
Should be submit document for that. For example, taxation. For the taxation, it should be external auditor. You cannot your accountant or anyone. Or should be advisor, the tax advisor for you.
Sir, it's not like that. Yeah. As of now, there is no written agreement is saying that the corporate tax report needs to be signed by an external auditor. What they are asking me, the FTA is asking, submit the financial statements which is prepared by the management. This is what they are asking. But when it comes to some doubts or if FTA has said that okay, there are some errors or evasion has happened over there, then they will ask you to submit the external audit report. So till that moment, no need the external audit. This is right now I'm saying about some if any issues or anything happens over there, then definitely FTA will ask you to submit the external audit report. So as of now, nobody is monitoring those kind of things, but obviously it may be going to be coming. Definitely yes, sir. We can expect that. That is why I always want to be said to my team. There is a chances that you guys have a bright future in terms of this accounting and auditing. Because in UAE or in, okay, let's forget about the UAE. In India or Europe or UK, what is going to happen over there? There is a certain rules and regulations that okay, every company needs to be submit their external audit report within this time. So it's there already. So that is how it's going to be happening in the UAE also. Maybe within another 1 or 2 years time, the importance of external auditors, the external auditor will going to be in a peak stage, and you must be the ultimate certificate for all the financial statements. It's not yes, definitely.
So I mean, to save yourself, you have to have external auditor for you as a company.
Yes, then the responsibility you are passing to the auditor. If you are giving your internal report, ultimately the responsibility lies with you only. If you have an external audit report, which is signed by the external auditor, then they are the one going to be taken care of.
And it will be for the company to be safe?
Yes, company will be safe. You are causing the liability to the Good morning, everyone. I know it's not good morning actually, it's too late. We are a little bit late for our event. Anyhow, we will be just starting the continuation of the previous program. We will be just starting the corporate tax section. As Fasila mentioned, it's a hot subject in the market. What is corporate tax? I'm pretty sure that you guys may have attended lots of events here in the market, and you are well aware about what is corporate tax. It's a small attempt from CDA side. It's a small attempt from CDA side to bring some of the insights to the corporate tax, to share our experience with our team members as well as with the deputies over here, especially the clients who are welcome over here. So it's a small attempt from our side to give an insights to the corporate tax, how the corporate tax is going to be effect here in the market. What are the points or what are the things as a finance professional or as a business entrepreneur we have to keep in mind. So these are the main points that we are going to be point out to the corporate tax section. So I will just start with the corporate tax. Corporate tax is a form of direct tax. Everyone know that. Corporate tax is a form of direct tax. It is levied on the taxable profit of all the business corporations and other judicial persons over here. So when it comes to taxable income, as a finance professional, I believe that you may have aware about what is taxable income, what is normal accounting profit. We have to do some sort of costs. There are certain adjustments that we have to do for the corporate tax in order to reach to the taxable profit of the company. Let's take a look at over here. As I mentioned, corporate tax is a form of direct tax. It will be on the taxable person which is incorporated in the UAE. So the first point where we have to discuss what is taxable person. So taxable person is something that we can see here. All the UAE companies and other jurisdictions incorporated in the UAE is considered as a taxable person. Then all the natural person, or the non-resident judicial person, and as a permanent establishment. That is another point over here. Permanent establishment. So since some of you have know about that, there are lots of companies in the UAE that can be a permanent establishment, that cannot be a permanent establishment. So here when it comes to the corporate tax, all the natural person or business person who has a permanent establishment in UAE has considered under the corporate tax of UAE. Then, as I mentioned, there are other points. Free zone, we will have more sections about the free zones moving forward. So these are the persons coming under the taxable persons under the corporate tax section, corporate taxable income. So how we have developed this program? We just going to be cover all the points, how we can able to calculate the taxable income. So under the taxable income, you know that there will be certain incomes that can be added for the purpose of corporate tax, and income that cannot be added for the corporate tax. The same case expenses also. There are some expenses that can be deducted, and there are some expenses that cannot be deducted. So these are the main points that we are going to be covered over there. So when it comes to the second part, the corporate tax is come to your mind. So you may have lots of questions in your mind. What is this corporate tax, and what are the points as a finance professional or as a business entrepreneur I need to be kept in mind. So I have listed out some of the points over here. So this is an overall insights of corporate tax. Wherever you are going, this is the points that you have to be keep in mind. So we can list out one by one over here. So the corporate tax, which is going to be effect for the fiscal year on and after 1st June 2023. So that will be the first point we have to be keeping in mind. Then there are two types of, not normally, there will be two types of corporate tax to become. That will be 9% of corporate tax for the taxable income, and there will be 0% corporate tax category as well. So these are all we will discuss in the next step. So I will be just pointing out the things as a finance professional or as a business entrepreneur. What are the points you have to be keep in your mind when the point comes corporate tax? The third one, okay. Yes, in 2018, we were aware about the value added tax. Now the corporate tax is comes. So whether all the companies in the UAE need to be registered for the corporate tax or not, that is the valid point. Yes, there are, you can say all the companies need to be registered for the corporate tax except Article 21 that I will be discussing later. That recently we have a public clarification or guidance from FTA saying that the small business relief is there. Apart from that, all the companies, including resort, need to be registered for the corporate tax. Then the other one. So there are different fiscal years are here in the US. Even if the majority of the companies are going through Jan to December fiscal year or financial year, but there are some other companies which is following another fiscal year. So what would be the corporate tax submission date and the payment date? That will be the next question to come. You can see all the companies has to be file their corporate tax or make their payment on or after before 9 months from the fiscal year ends. So that is another point that we have to keep in mind. Then withholding tax, that we know that in UAE the withholding tax is only 0%. Withholding tax is nothing that will be paid by the payer on behalf of the recipient of the company. The supplier will collect on behalf of the customer and pay back to the government. But ideally in UAE the withholding tax is 0. That is why you can say there will be no much effect will come for the international customers over here. So 0%. Then the last point, okay, we will be discussing about again, since I mentioned about taxable income, whether some of the normal income, apart from that, these incomes will be as part of the corporate taxable income calculations or not. So you can see the profit distribution and the dividends received from other UAE entities is exempted from, is not need to be calculated for the corporate tax purpose. So that is I have mentioned over here. So the next topic. Okay, so you can note down all the doubts wherever you have. So I will be addressing all these questions later on this section. So now, I know, okay, you guys are well aware about how to prepare the financial statements of the company. So those net profit of the company is valid for our taxable income calculations or not. That is the next thing where we have to do. As I mentioned in the prior note, there are certain adjustments or there are certain additions or deletions has to be made in our financial statements in order to reach the corporate taxable income. So that's I have mentioned. There are some incomes that need to be exempted from there, or there are non-deductible expenses are there, some expenses that can be deducted. So these are the we are going to discuss one by one with that. So this is exempted income category. So basically, you have a certain types of income. That income may be from income from UAE, income from outside the UAE, and there are some other sort of other incomes that comes in normal profit calculation. So out of that, some income that cannot be used for the purpose of taxable income calculation. There I have mentioned dividends and other profit distribution. You can see dividend and other profit distribution. Then income from capital gains and foreign exchange gains. Then foreign permanent establishment exemption. Then the last one. It's not that much of important, that's also is there from the aircraft and so on. So you can see these are the income that you cannot be included for the purpose of calculating the taxable income. So on the other side, this will get benefit from the company. Like the taxable income, maybe if you have 100 million turnover, so out of that maybe 800,000 only, 8 million only you have to be there for the government. So the rest 2 million can be excluded since it will be coming under the exempted income category. So we will be discussing this in the next level along with our examples. So let's move to the other section. That will be non-deductible expenses. So I think this will be the most important area as a finance professional that we have to be keeping in mind. Since as of now, when you prepare the financial statements, We are taking all the business expenses that is part of calculating our net profit or net loss of the company. But when it comes to the corporate taxable income calculation, there are certain expenses that is given by the FTA saying that okay, these expenses cannot be deducted for the purpose of taxable income calculation. That means our net profit going to be high. So here the point that you can be able to mention how you can able to determine these expenses I can be included as part of my taxable income calculations or not. So majorly the Article 33 is saying that okay, these expenses, if these expenses are relating to this particular category, yes, you cannot be taken for the purpose of taxable income calculation. So it's obviously clear that FT is giving a clear indication of okay, these are the expenses you cannot be. So I will be just explaining one by one. Sorry. Yeah. So you can see non-deductible expenses. Expenses relating to bribes. So the term they have used is as a bribe, but I don't think UAE this never ever. But we keep this as the same word over here. The expenses related to the bribes. Like if anybody is doing those type of things in the UAE, they cannot be able to deduct those for the purpose of taxable income. The second one, fines and penalties, is obviously. Since you are going through all the financial statements of all the clients or all economic, there are certain fines or there are certain penalties which that is normal part of the business. The fines government is going to be levying on your company or there are certain other fines. Those fines or penalties you cannot be deducted for the corporate tax purpose. Then donations and grants, which is not qualifying public benefit entity. This is the third point. If you are reading the newspaper, you will come to know that okay, recently there will be clarification comes for this subject. If the companies are giving any donations or grant for the qualified public benefit entities, in that point of view, those expenses can be deducted for the taxable purpose. But what I mentioned over here, if you are giving any donations or grants which is not coming under the qualified public benefit entity, then you cannot be deducted for the corporate tax purpose. Then expenses, the last 2 points, the second last 2 points is coming together. All the expenses, all the business related expenses that you can be deducted for the purpose of corporate tax. If any expenses like staff advertisement expenses, usually it's not coming as part of the business expenses. It will be coming under the staff advertisement. So those kind of expenses you cannot be able to deduct for the taxable income calculation purpose. Then client entertainment, then exclusively for the other one. Then interest expenditure, it's a big subject, like we have to go through one by one what is interest expenditure on debt finance. But obviously we can say if you are taking any loans or if you are taking any finance from any of the financial institutions, only 30% only you can be deducted. That will be based on the next one. But you can say a portion of the interest expenses you cannot be deducted for the purpose of taxable income calculation on debt financing. Where it mentioned debt financing, you cannot do. Yeah, these are the continuation of the deductible expenses. In continuation with the non-deductible, there are certain expenses that can be deducted for the purpose of corporate taxable income calculation. So it's a normal expenses like amortization, depreciation, and 50% of the retirement expenses. Then client, 30%, this is what I have mentioned, the 30%. Sorry. Yeah, 30% of interest expenses, this can be deducted. Then all the business related, like you can say literally, you can say all the business related expenses that can be deducted for the corporate tax purposes. So it is management call or there will be certain decrease will going to be come from FTA side. Okay, these expenses are particularly for the business related expenses. If these expenses are under this nature, no, this will be out of the books of the business expenditure. You cannot be deducted. So normally all the business related expenses you can deduct for the corporate tax purpose. So now we have covered. If anybody is not found, just then I can keep the notes. So Now we have covered what is taxable person and how the taxable income of the company and which are the expenses, which are the income can be deducted or cannot be deducted for the taxable income calculation. So going to the next one, I have small illustrations for you. It's a normal profit and loss account. Here I have calculated the gross income, then the total expenses of the company, then net profit. On the left hand side, you can see these are the normal profit and loss account. So this profit and loss account is, you guys are well aware about how to prepare this. So some of the expenses what we discussed earlier, those expenses can be deducted, that cannot be deducted. That I have made an illustration over here. So here you can see the normal accounting profit is coming around 4. Accounting taxable total income is coming around 4.3. So from there we have cost of sale. We reach from the gross profit stage. Then we have total expenses and net profit. So you guys are aware about this. Okay? How you will reach to the normal net profit of the company. Now the next part, how the corporate tax or taxable income is going to be calculated. On the right hand side, you can see some of the revenues that we have included in the normal net profit calculation. We cannot be included for the purpose of taxable income calculation. There you can see these two. As I mentioned, you profit and other dividend distribution from UAE other development companies. Then permanent foreign establishment. These are the incomes that we cannot be added along with our normal revenue. So that we need to be less here. So approximately you can say from 4.3 million, the eligible gross revenue for the corporate tax purpose it is reached out 3.8 million. So when it comes to down, you can see the total expenses. So before it was 2.6 million, now it's reached on 2.2 million. So eligible expenses is only 2.2 million. So there you have seen if any expenses that is relating to fines and penalties, okay, you cannot be, you need to add back to profit. Fines and penalties related to taxes, you need to be. Then donations and gift, I mentioned you, okay, this is not coming under the qualified public benefit, so you need to be add back. Then the entertainment expenses, obviously 50% of entertainment expenses you can deduct back for the purpose of corporate tax. So now from 600,000 we reached to the taxable profit of 500,000. That is the amount at the end of the year coming as a taxable income for the company. Now, how we will calculate the corporate tax percentage? As I mentioned, there are 0% and 9%. So the taxable income we reached for 500,000 here. So out of that, the taxable profit up to 375 is coming under the category of 0%. So as a company, you don't want to pay the tax for that 0%. Then the balance is coming 125,000. So the 9% is the corporate tax rate. So out of that, you have to pay the corporate tax for the company. So it will be coming around 11,250. Ultimately, that will be the end result of the corporate tax calculation. So there will be two things you have to be keep in mind. One, up to 375,000, this will be 0%, and over and above 375,000, yes, we need to pay 9% corporate tax. So ultimately, this will be the net tax liability comes for the grants. So now, maybe some questions comes to your mind. If this is a loss for the company, even I was also in the same condition. I was also thinking, okay, if I have a loss for the company, what should I do? So it's clear over there. If you are loss-making company, I believe I don't want anybody to make a loss-making venture over here in the market. But at the same time, if there are such chances, if the company is having loss for the company, in that case, there is no tax liability coming for the company. So you can carry forward these tax losses to the next year, for the following year, and these tax losses can be deducted from your taxable profit for the coming year. So that we will discuss later, but that also there along with it. So there will be taxable profit area, there will be taxable loss also. So taxable, the tax loss can be equal to pay back along with the following year tax profit. So I hope these areas clear. I have clearly divided all our sessions into different expenses and how we can reach to the point of taxable profit. So when we talk about small and medium scale companies, this is the best thing that you want to keep in mind. You don't want to bother about transfer pricing. You don't want to bother about some other international transactions. So on a small and medium scale company, or when it comes to a normal scale of business, this is how you need to keep your mind for the corporate tax calculations. So let's move back to, I don't want to take too much time, I'll be finishing So let's say now corporate tax we have calculated, the taxable income and the corporate tax we have calculated. Now when it comes to the submission date and its registration. So as I mentioned it before, 9 months on or before 9 months from the fiscal year ends, we have to file our corporate tax and we have to make the payment for that. So right now you can see here I have given as I mentioned there are three usually there will be 3 fiscal years are here in the UAE market. The normal one is Jan to December, and another one may be June to May, and the last one maybe you can say some of the Indian companies they will be starting from April to March. So these are the fiscal years usually here in the market. So you can see each of the examples I have mentioned, what would be the first fiscal year, what would be the first filing tax date, and what would be the payment date. Usually the submission date and payment date will be coming on the same day. So that means on or before 9 months from the fiscal year, yes, that will be your submission date and payment date. So all the options you can see that we will do. So let's take an example of the 90% of the companies they are using on this fiscal year in our environment. So you can see 1st January 2024 to 31st December 2024. This will be the first fiscal year that will be counts for your corporate tax. So you can say first filing date 30th September and payment date it will become 31st September the same day. So it will be applicable for other fiscal years also. The 3 examples you may have. Now this is just an illustration from our side, like okay, since this is the first corporate tax filing. So maybe your corporate tax fiscal year is different from other companies. So in order to make it clear for you, I have clearly mentioned what are the due date, submission date, and the payment date for each fiscal year ends for the company. So it's clear. We are now maybe in May. So 1st June 2023 to 31st May, because their fiscal year is on 1st June to 31st June. In that case, the first tax payment is coming 1st June 2023 to 31st May 2024. And their return period will be 28th February 2025. Means 9 months from this point. So this will be the date that you have to keep in your mind. So before this date, every company in UAE has to be filed there. Not every company, whoever comes under this fiscal year, they have to file their tax return and then make the payment also. So this is another example for Jan to December. So when you ask me about what is the fiscal year of CDA, yes, this will be the one. Because 90% of the UAE companies, they follow the fiscal year of Jan to December. So in that case, I have time until 30th September 2025 to pay my corporate tax and to submit my corporate tax rate. So let's move to the next subject. So I think this part is clear for all of you guys. So corporate tax registration. So some of you have received the email from FTA saying, okay, your company need to be registered for the corporate tax. Not all the companies. It's usually we are receiving emails from FTA saying that okay, your company need to be registered for the corporate tax. Okay. In that point of view, what are the documents that you need to be key for the corporate tax registration? What is the process behind it? 2018, if you guys have done the VAT registration, this is the same format, this will be the same name, and this will be the same process and document. Everything is 90% same when it comes to the corporate tax registration. Only the exception, if you have an existing username and password, you can use the same username and password to access this. With that link, you can able to register your company for the corporate tax purpose. So these are the details to be given and these are the documents to be prepared for the corporate tax registration. So all these documents are the normal legal documents of the company. Those legal documents you can see, the trade license, MOA, Memorandum of Association, then honor details, obviously the rate and the rest of the things, then authorized signatory details. So these are all the common documents that as a company you will get from the DMD and other government entities over here. So we need to fulfill all these items to get the tax registrations right. Now, we came to know about taxable income and we have prepared the taxable profit and we made the corporate tax for the government and we have done the registration sessions. Everything has completed. Now the next question comes to our mind. Okay. How I will protect my company from all the other legal compliances, all the other tax audit from the government. So there are certain guidelines given by the FDA that we have to keep some of the documents or we have to keep our documents ready for corporate tax purposes. So this is mainly to support our corporate tax submission. So you can see, okay, as I mentioned, every company they have a corporate tax registration number. Then tax period I already mentioned. Within 9 months, before 9 months time you have to make the corporate tax. Then these are there. All the taxpayers are expected to prepare and maintain financial statements as per accounting standards. So nobody can prepare the financial statements as you like. There are certain standards, that is international financial IFRS is the normal one, that will be followed by all the individuals. So it is very clear that you must prepare your financial statements as per the IFRS. So second one, this one, but it was only 5 years. And for the corporate tax purpose, you need to keep your books of account for the next 7 years time, following the end of the relevant tax period. So I believe that these 2 points are we need to be keep in mind. That 7 years we have to keep our books of account, and 7 years we have to keep our books of account, and we have to prepare our books of account after the IFRS. The rest all are the normal, practices that here in the market. You don't want much worry about the corporate tax. This is my personal opinion, but at the same time, corporate tax is something that is very easy. When we reach to that, we come to know that these are the areas that we need to be focused on. It's very simply straightforward. Maybe certain adjustment that we have to be do for certain expenses and income. Then after that, we will be able to do that. So we have covered almost everything related to the corporate taxation. And I believe that there are a couple of other areas also we just have a look for that. Then it will be, it will be easy for you guys to get the things to do. That will be one is among that small business relief. Small business relief, as I mentioned previously, not all the companies, the FTA may give you the capital decision, they may say, okay, these companies don't need to register for the corporate tax. So this is one among them, that is small business relief. If your revenue for the relevant tax period is less than 3 million, then you don't want to do, you will be coming under the tax exemption, corporate tax exemption. That will be valid until 31st December 2026. I forgot to mention over here, that will be valid until the fiscal year ends on 31st December 2026. It may be changed, but as of now, this will be the guidance received for the FTA. Less than 3 million companies, revenue they don't want to be, they will be coming under the exemption, and that will be valid until 31st December 2026. Then, free zone companies. If we start talking about the free zone, we can't able to finish within 1 hour time. Free zone is that vast area that we have lots of huge vast areas. But I will be just covering what is the significance of corporate tax for the free zone companies. In the earlier note I have mentioned, all the companies in UAE need to be registered for the corporate tax purpose, even if it's a free zone company. But in Along with that, what FT is saying, you may have get the tax exemption for the corporate tax purpose if you are coming under the qualified free zone person. So, what is qualified free zone person? They have mentioned if I want to become a qualified free zone person, they are mentioning like they must need an adequate substances in the UAE. They must derive qualified income. Then they must be compliant with the transfer pricing rules and laws of fees. So basically, the first 3 points are important to become a free zone, to become a qualified income person. So out of that, I want to point out about the substances. So when it comes to the adequacy of the substances, so the term itself is an adequacy. Nobody has told us what is the percentage of that adequacy. But it's saying that if I have an adequacy in economic substance in UAE, I have a business in UAE, and I have a permanent establishment, I have enough persons, 50% of my staff are working from the UAE, then I have visas, I have other sort of things, then I can say those free zone companies have enough adequate substances in UAE. Those companies and their business is completely outside the UAE, they are coming under the category of qualified income, then yes, so those companies will be exempted from the corporate tax purposes. So this is what related to the corporate tax, related to the free zone companies. Then tax group. So when it comes to the tax group, everybody starts the business with one company. And after that, they are adding multiple companies along with their portfolio. So, in that area, the relevance of tax group is there. What exactly is that? If I am able to form a tax group within my portfolio of the business by adding 1 or 2 or 3 companies, then the minimum requirement is required that all the group of companies must have the same financial years. All the group of companies must follow same accounting standards. Then group companies and be registered in the UAE. Those kind of requirements has to be there. So if you fulfill all these requirements, then you can be able to be a part of it, able to be part of the group of companies, tax group. The main benefit where you are getting, since I mentioned you about the tax process, if any of the group companies are creating or are having tax losses, those tax losses can be set off against the taxable profit of the other company. So this is an additional benefit, or this is a benefit you are getting if you form a tax group in the UAE. So whenever, if you go back to the practical experience, if one company has a 100,000 profit and another company has 50,000 loss, so in that case ultimately you are liable to pay 9% on 50,000, not on 100,000. This is the example I can give you over here. Let's move to the last section. This actually is always my curiosity how these kind of analysis in my tax. When I'm going through the tax, I always compare what is the UAE's position, where the UAE stands in terms of risk. By going through all these things, you will come to know why our UAE is the best among the region or among the world in terms of corporate tax. UAE considered to be the best investor friendly country all over the world, the lowest among the region. That is what I am trying to explain here. You can see when it comes to other GCC countries, and major players in the market, Dubai is the lowest, the UAE is the lowest among the region. So that is only 9%. So in that point of view, UAE is keen to support all the business owners, all the newly started enterprises, and all the investors across the globe. So that is why we always want to be staying in UAE. We always want to be a part of UAE business portfolio. So you can see 9% in UAE, KSA is 20%, Qatar is 10%, Oman and Kuwait 15%, Qatar and not at 3%. Then other big players in the market, USA 21%. US is entirely different. Apart from that, you can see UK is 19, then China 25, India hardly 25 to 40, Russia 20%. So by concluding this, we can say UAE will going to have a good future even if they have to deal with the corporate tax. So we have large in the region, that is why we can see UAE, especially Dubai, will going to be on top of the world when it comes to the business. And it will be continue to be a business hub for all the other countries across the globe. So, yeah, I think I have covered, these are the main points with regards to the corporate tax. So I think I have covered the points. So I know that I did not able to go through hundreds of things. There are, if I start to talk about the corporate tax, maybe the 1 day or 2 days may not be enough to explain all the aspects of the corporate tax. But as a small and medium scale business or as a businesses who are surrendered out there, it will be enough to calculate the corporate tax. It will be have insights to the corporate tax when it comes to your normal or taxable profit calculation, when it comes to other sort of revenue calculations. So I think that's for the meeting. We are about to, it's almost 1 o'clock. So if anybody, anything that I need to be addressed. Okay, we have another section is coming into 2 to 3. That will be an open discussion section. So some of my friends need to be late, so I need to be wind up this section for the meantime. But we will be going to be continuing after 2 to 2:15. We will have another open session with regards to this discussion. So before winding up this section, I have seen that. Okay, maybe you are not aware, we are going on live over there. It's the first time in my lifetime I have a live session with my kids. So there are a couple of questions I was able to see. So before I am coming to my other fellow colleagues, I will be answering to those things as well. So if anybody has picked up that questions, they can always I will answer.
Yes, we have few questions received, and the first question is from Tom Babu. And his question is, hello, so I have a question. Will the prior year losses can set off against future taxable profits?
Tom, I believe you have missed some of our conversation. We already answered that question. So all the tax losses for the current financial year can be set off against the future profit of the company. So it can be.
Now there is another question which is received from Neha Gigi. Hi sir, will self-employed persons like freelancers be subject to UAE CT?
There are 2 different aspects when it comes to the freelancers or self-employed. Since you are all guys are the financial professional, initially, yes, all the freelancers are subject to the corporate tax. But now you can see the small business relief is there. So that is 3 million. So I don't believe that the freelancers can be able to earn more than 3 million in a year. In that case, they will be going to be able to. But yes, you can see they are going to have more revenue, then yes, of course, they are coming under the corporate tax as well as that.
Now we have a question from AJ Gaming. Hello, my doubt is regarding salary. Will my salary is going to be taxable in UAE?
Yeah, of course. No, as of now, you can say you're safe with that. Your salary is not going to be taxed by the government for the meantime. As of now, no, the salary, there is no income tax.
Another question is from Sona Elias. I have one question. Will UAE CT replace VAT in UAE?
I forgot to include those stuff. Basically, VAT, value-added tax and corporate tax is 2 different. One is an indirect tax, another is a direct tax. So it is never ever going to be replied. VAT will be asked that is started from 2018 onward, and now on 1st June 2023 is a corporate tax. So VAT and corporate tax is entirely different. It is never going to be replied.
And we have one more question from Sona. This is
Not down there now. So we have to call her again. She's asking more questions.
Also, I would like to get more clarity clarification on when do I need to pay my UAE CDA liability?
Yeah. So we can consider to the first, since the first corporate tax filing depends upon their fiscal year, it is going to be. But generally we can say 9 on or before 9 months from the fiscal year, yes, everyone has to pay the corporate tax along with the subsidies.
There is another more question.
So can we move this to the discussion, open discussion session?
Yeah, we can just have it in the open discussion, so we can write out.
Since you know some of them are so we have to. So we are just going to wind up the things. I know you may have a couple of things need to be addressed. So if I want to address now, I can, but I believe some of my friends need to leave now. So in that case, we'll be just winding up this section. For the meantime, we'll be continuing after 2 o'clock with the other discussion sessions. So once again, thank you so much for attending this and we are very glad to give you more insights and more doubts and clarifications about the corporate tax. We will definitely going to address those kinds of. So thank you so much for your time.